Hi there, welcome to another session of Informed Investing by ST Research. My name's Don Lawrence, I'm the CEO of ST Research. StockTargetAdvisor.com is our platform. I'm a financial analyst and a trader. Today I want to have a brief chat about the markets. Obviously, it's got a lot of people concerned what's happening in the last especially in the last couple of weeks. Very volatile markets, especially on the Nasdaq. Just want to sort of kind of shed some light and sort of help people understand what's going on here. Basically, markets run sort of cyclically. Prior to last year, obviously the high of the market was just before Christmas. The markets run through cycles. So we were sort of in an expansion cycle for the last year and a half, 2 years, after that dip in 2020 when the federal banks started printing money and it really got the economy and the markets going. So we were in an expansion cycle. And then what happens now is we've got these huge inflationary pressures, and the federal banks need to do something about it. So they've got to raise rates. So in a raising rate environment, you're going to get a down cycle. So that's what we're experiencing here. Now, obviously, we're getting a lot of extreme volatility, as I mentioned, in the Nasdaq and the tech stocks sector. The reason for that is generally because there's a lot of speculation within there. Obviously, loftier valuations and there's been huge upside in those areas. So when there's a risk-off environment, meaning people are want to take less sort of risky trades, they start selling and locking in the profits, and that's exactly what we're seeing happening on the markets. So generally, we're probably going to continue a downward cycle. I'm hoping, by the looks of it here, we're going to have a bit of a bounce. I think we're really due a bounce here. Today we saw, which is today is May the 19th. We saw some volatility going on back and forth between, especially on the Nasdaq, between positive and negative. So that sort of that move there means the markets, especially on the Nasdaq's, trying to find a bottom. Obviously, the S&P and Dow haven't come back anywhere near the Nasdaq has. So really, we're watching the Nasdaq right now and seeing what happens. So generally speaking, speaking to the volatility, one of the things that markets don't like is they don't like uncertainty, and we certainly have massive amounts of uncertainty right now. We've got huge inflationary pressures that we haven't had in over 20 years. You go to the gas pump, you see the extreme increase over the last year of the gas prices, and that has a huge effect right through the whole economy. The other obviously thing we mentioned there that we've got those rates. So the rates are going higher, which means borrowing money is going higher. So it's taking out that excess. We've seen this massive, over the last 2 years, massive increase in all asset prices, whether it be houses, stocks, used cars, all sorts of areas where that excess money is going to, and that has to come out. That air in that bubble has to get deflated a bit. So we have to bit more of a balanced market. Then we're going to add in obviously the issues in Europe and the tensions there, and that's another thing that the market doesn't like. So we've got these massive amounts of issues that are causing a lot of uncertainty, and that's just what the market doesn't like. Now, generally speaking, a lot of times the markets can handle we've seen, they say the markets can handle a wall of worry sometimes and just keep going higher and higher and higher. But the problem is the key thing is liquidity is coming out of the market, right? The printing of the money's coming out, so that's taking away the steam that we need to go higher to sort of navigate and push through that negative sentiment. So that's really what we're dealing with. We're dealing with all these uncertainties, which is causing these extreme gyrations, as mentioned, specifically on the Nasdaq. The Dow and the S&P are holding up much better. So right now, as I mentioned, I'm hoping we're gonna have a bounce on that Nasdaq after the steep fall. So I'm thinking it looks like it might come up to 3,800 to 14,000 on Nasdaq there. You'll probably get little bits of a bounces on the S&P and the Dow. Obviously not as much because it didn't fall as much. But on the Nasdaq, that's really what we're watching. The index of most interest at the moment. And it's very possible that the downside of the Nasdaq could be 8,000. Now, obviously, we're looking at this. We're looking at the technical aspect of it. We're looking at sort of historical. Patterns and different stuff like that. So of course these numbers are just arbitrary, right? So this is basically based on based on experience, technical analysis, and various other indicators and stuff. Nobody knows for sure, but there's a good chance that's sort of the bottom range that we're dealing with. Of course, it could go further than that. But I would say 8,000 looks like it could be the bottom. But I think before, hopefully it doesn't get there. I think we should have a bounce up into that 13,800, 14,000 range if we can gain some momentum here and go higher. But of course, we could get another leg down from there. So the markets could, get up in that high 13s and then take another leg down, and that's when it could start testing that 8,000 range. Anyways, guys, thanks very much for tuning in and listening. Again, we just want to sort of reach out and help educate, help people not to be so nervous with the markets. And if you have any questions on any stocks or the markets, please hit us up there in the comments, or we'll respond by either on our blog or by video here. And you can always email us at admin@stocktargetadvisor.com. Of course, check out our website. We've got many plans to help you, and lots of research and data points to sort of get you through this and to see the bigger picture of what's going on. Anyways, guys, thanks for tuning in again. Appreciate it. Happy trading. Cheers, guys. Bye-bye.